All right. I'd like to welcome everyone and thank you for joining us in today's webinar, Merchant Services Unlocked, Expert Insights to Power Your Business Payment Strategy. My name is Roberto Salinas, and I'm a Senior Vice President and Director of Treasury Management and Product Solutions at Johnson Financial Group. And as many of you know, businesses think of merchant services as just a cost of doing business. But in today's webinar, we want to reframe that way of thinking. At Johnson Financial Group, we believe payments are not just transactions. They can be a strategic and powerful lever to improve your cash flow, reduce costs, strengthen security, and create efficiencies across your payment ecosystem. With that being said, I have three expert panelists joining me today that are going to talk through that. First, Carly Graham. Carly is AVP, Treasury Product Manager, and Merchant Services Consultant at Johnson Financial Group. Carly currently oversees merchant services and here at JFG and provides many insights. Previous to that, she was the Director of Merchant Services Experiences at a financial payments company. Carly specializes in all the details, especially merchant services, and brings deep expertise in how these solutions work and advantages they offer. So thank you for joining us, Carly.
Thank you. Happy to be here.
We also have Rob Hogan. Rob Hogan is VP, Treasury Management Sales Manager at Johnson Financial Group. Rob currently oversees Treasury Management Sales at JFG and regularly consults with clients on Treasury challenges, including merchant services. He brings an informed perspective in both sales and product conversation. Rob really takes the time to understand how merchant services integrates into a broader Treasury strategy to deliver client value.
Thanks, Roberto.
Cindy Blackstone is also here, all the way from Texas, so welcome, Cindy. Cindy is VP of Strategic Partnerships at Deluxe, which is our merchant services partner. Cindy is our dedicated partner on our merchant services side and works closely with JFG to support client needs. She brings expert insights into industry trends, competitive dynamics, and what's next in the payment landscape. Welcome, Cindy.
Hi, good morning.
So we have a lot to cover, so I'm going to get right into it. You know, we talked about it. The title says it. Most businesses see payments as a necessary expense rather than a strategic tool. Why is that mindset limiting, and what are they missing when they think that way? Rob, why don't I start off with you?
Yeah, thanks, Roberto. Unfortunately, a lot of times when we talk to customers, they can think of merchant services maybe as an afterthought or a necessary evil sometimes. There's some fees that come with it if they're accepting payments. It's a different platform in some circumstances. So on the front end, there's a lot of education and perception change that we have to do for customers of, how impactful of a tool it can be for them. Helping them understand that and helping them understand how it can affect their overall treasury toolkit. Some things that come to mind to me are, cash flow timing, whether that's quicker AR turnover, next day funding of those dollars, reconciliation enhancements, some automation that comes around that, and some fraud controls. So I think helping to help them understand those things, helping to change perception of what merchant services can be is important because a little education and some small adjustments in their merchant services ecosystem can create a lot of efficiencies as well as potentially a better client experience for their customers.
Oh, that makes a lot of sense. Carly, what are you seeing in your world?
I would echo everything that Rob said. I think a lot of times when I sit down with our clients and different businesses, I really find that payments are siloed. And so when we're having these different conversations regarding different treasury tools, payments doesn't always come up, but it's such a large portion of a business's business, really. If you're not, as a business, if you're not accepting payments in certain ways, you could be losing the sale, which directly affects cash flow right from the start. Mm-hmm. So I think it's really important that when we have these treasury conversations, and Rob and I have been working together to really try to reframe this framework in a way that it's like, okay, we want to sit down, have these conversations about your whole payment ecosystem. What does it touch? How do we help, decrease costs? Let's not do that, right?
We don't want that.
Increase efficiency and really figure out a way to make payments a strategy as opposed to this is an expense that I have regardless.
That makes a lot of sense. And kind of goes back in time when you think about treasury management and businesses accepting payment for so long. Check was king, cash was king, ACH got introduced, and now card is just really part of the ecosystem, and it's really trying to reframe that thought process. Shirley, Cindy, what are you seeing?
At an industry level, we're seeing the same thing. Quicker conversion cycles produce more loyal customers, especially for those in the industry that are willing to pivot with what the demands are. Those are the businesses that we're seeing that are so successful.
No, I love that. We hear a lot about, you talked about decreased costs, right? That's the key there.
Yes.
Just want to make sure everyone heard that.
Key point.
So cutting costs, boosting cash flow, those are all things, they're kind of hot topics. They're key words and kind of a word cloud when customers think about how they're going to process business. Let's talk about cash flow. Let's talk about where we're seeing our biggest opportunities for companies to lower costs, improve working capital, and do all that really through merchant services and accepting credit card. So Carly, what are you seeing?
So when we talk about lowering processing costs, I think it really comes down to first defining what are processing costs. So there's a term in the industry called the double bubble, which is basically like 80% of fees go to all of the card brands, and then 20% of fees go to your processor and your solution. So when I look at a statement, that's really what I want to see is that 80-20 rule. So we can control that 20%, right? The processor controls those costs. But what about that 80%, the bulk of those fees that go to the card brands? What can we do about that? So that's where I like to come in and look at interchange. Interchange optimization as a whole, you hear it talked a lot when you're talking about B2B payments, business to business, with level 2 and level 3, and how passing additional data can really clear up some of those fees and really reduce some of that interchange. However, it's really across the board on all different businesses, consumer as well. They might not have a level 2 or a level 3 program, but I can tell you that most of the time I see downgrades, which means that transactions are not essentially getting that best interchange rate. They're downgrading to a higher rate. So when we really look at your overall processing costs, and we look at that 80% that are just coming from the card brands, we can actually do optimization to help cut fees. And that doesn't cut into processor costs, software costs, et cetera. That is cutting straight from the card brands. And so that's where I see a lot of success and a lot of cost savings that, again, if you're a processor, that's not hurting any revenue there. But if you're a card brand, like they're going to feel that impact there, and they get it from all sides. So it's like we can help optimize some of that a little bit. So
let's talk about that, Carly. You say we can help. What is that? Is that as simple as me working with my treasury management consultant and sharing a merchant statement? Is there more evolved? Is there more data you need to be able to analyze that?
I mean, it could start off as just sending a few month statements, right? Rob goes out and has these conversations, or his team, and we start asking about merchant. How are you processing payments today? Can we see a statement? And typically, a statement from a processor should have every single transaction broken down with interchange. Now, that's when things get a little tricky, right? Because processors can be kind of sneaky and hide fees different places. So to have a set of industry eyes on there, someone like experts within JFG, we can take a look and say, hey, we can see where they're hiding these different fees. Let's have this conversation and let's work on doing some of that optimization. So to your point, absolutely statements. Otherwise, let's just hop on a call and have a conversation. Let's talk about what you're seeing. Let's talk about what your fees are. There's some benchmarking we can, if it's a B2B business and they're paying 3.5 or more %, it's like, hold on, what's going on here? Let's take a look at that. For your industry and your size, it should be less. So
yeah,
it can come in different avenues, but I think that's a great place to start.
Yeah,
For sure. So
starts as a conversation, understanding ecosystem, understanding what they're doing. Statements is where we like to start because it at least provides us like a foundational piece, but then bringing in Carly, the experts, because, us as consultants, what I like to say is we're an inch deep and a mile wide. We know enough to be dangerous about this stuff, but luckily we have experts like Carly that we can bring in that know this space really, really well, that can analyze the data and find opportunities to create enhancements and lower processing costs. So,
and that's one side of it. We talked a little bit about cash flow. We talked about cash conversion cycle, working capital. What are you seeing from that perspective
Sure.
when you think about lines of credit and
Yeah.
receiving cash quicker. And what does that mean to our companies? How can they boost some of that by accepting credit card?
Yeah, I think, that's important for us as consultants. Carly does a great job of explaining lowering processing costs, about educating customers on what interchange is, what we have control over from interchange costs from the card brand versus what we can control from the processor side, right? And you'd be surprised at how many customers don't necessarily know that on the front end, that have to, that think that, it's 3% or 2.8%, and we have full control of that entire, 3% and can bring that down to whatever that may be. So some education on that on the front end is important. But to answer your question, Roberto, from a consultant perspective, it's connecting the dots between merchant services and cash flow and growth. So an example that I use, whether that's cash conversion cycle or like a working capital line of credit, a customer that is utilizing a working capital line of credit dips into it on a weekly basis to fund working capital needs. If we can convert their AR turn by 10 to 15 days, they're gaining access to cash that much quicker, that then they can access those funds, pay down that working capital line. Their interest that they're paying on those funds is decreased significantly. Now, to us as a bank, maybe not the best thing, but we're working in the best interest of the customer. And that's just going to make the relationship stronger at the end of the day. So I think, one, that's the benefit of working with your banking partner with merchant services. But holistically, when you think of processing costs, working capital, cash flow, it rounds out that conversation of, we're going to do everything we can from a processing cost perspective to lower that. But also, we're going to look at your relationship holistically to try to see what we can do to bring in cash quicker, to create a cash conversion cycle that makes sense for you.
Sure. No, and from what I'm hearing is, can be limiting to think about, I'm not going to accept credit card because it's going to be 2.5% and 3% that's taken away from my margins of my business. But what can I sell more? What can I buy inventory? How can I treat my business differently by receiving the cash a little bit quicker?
Yeah.
And it sounds like that at least should be part of the conversation if you're a CFO or you're a treasurer and you're looking at different ways of designing your business. Cindy, what are you seeing from an industry benchmarking perspective? Deluxe has all the data in the world. So how are you leveraging that to determine how we're pricing our customers correctly?
Yeah, and y'all have hit two really key topics. Those that are taking payments and looking at it as a lever or more agile, and then those who are looking at the cost and maximizing, am I doing the best thing for my business? And, we never want a commercial customer to become an expert in payments, right? That's not their sole, purpose in life, but to lean on you guys for that. And that's really key, because there's a lot of hot topics around this in our industry right now. A mandate has came out this year called CEDP, and it completely surrounds level 3 processing that Carly was speaking to. And so what we've seen in the industry is software systems collect all this level 3 data. And what's happened is it hasn't been verified in the past. And so these software systems have pushed into those certain fields dummy data. And so these processors have been allowed to get it at a rate of interchange that is assuming the level 3 data was right. Well, the CEDP mandate that we're seeing come out is going to say, if that data is not accurate, you're no longer going to receive that benefit. And so it's going to force software providers to say, hey, what goes in those level 3 fields has to be accurate. So we're about to see a big shift. So it's a very key time for commercial customers to talk to the experts at their financial institution, JFG, the experts that they trust, to say, hey, will you look at this with me? Because I don't want to be impacted negatively because I'm not passing through level 3 data. Right now is a prime time for business owners to be looking at that, because if they're getting a huge benefit of level 3, and most of them probably are, it could really significantly impact them moving forward.
Wow, that's great. That's great advice. I mean, if you look at it now, many of us are going through budget season, right? And you're looking at what does 2026 look like to get a huge increase in your merchant services processing, because your merchant services provider did not talk to you about the dummy data and the CEDP changings that are happening. a little bit of a disservice there. So certainly, if you haven't already, reach out to your merchant services provider, start having that conversation. It's key and it's super important. One of the things I do hear, though, from businesses, I have the conversations and they'll throw out there and say, I'd love to accept credit card, right? I get it's 2.5%, 3% cost of doing business, but I take check. It's just so easy. It goes through my lockbox. I'm able to key in post. Sometimes I have some automation built into my ERP system. I can reconcile within minutes. Merchant services is way out of the scope, and I have no interest in doing that. Curious, what kind of feedback are you getting when you have those conversations with clients? Maybe Cindy, I'll start with you.
I think it's key to keep an eye on your processes and to make sure that what you're doing is best for your business, to make sure you're streamlining whatever processes that you have in place, and that it is allowing you to receive the benefits that you need to be receiving with the way you're accepting payments for your business. And education is a big part of that. You've got to educate yourself as a business owner. Again, not be an expert on everything payments, to lean on you guys to say, hey, am I doing everything that is creating those efficiencies that I'm desiring? Can you help me look at that process and see if I'm doing that, and define, hey, am I maximizing the way in which I'm taking payments? And is this the best practice for my business, or is there something out there I'm not aware of?
Yeah, that makes a lot of sense. And I see so many companies investing heavily in ERP systems and designing those to be able to reconcile a lot better. I think part of the conversation certainly should be, I'm accepting credit card, ERP system. How do you help me reconcile? Rob, what are you seeing from your seat?
Yeah, I think what you just said is a good starting point. Having conversations on the front end with our customers of what are some capital investments you're making. We've seen a huge shift in clients investing in ERP systems, I would say, in the last 3 to 4 years. So that, I think, on the front end is part of that conversation. On our side is, are you in those conversations? But to your question specifically about merchant processing, it's integrations. Check is there, lockbox is there, cash is there, but that's a manual process at the end of the day. If you're setting up merchant processing in the right way, and the ways that we can try to help you, we can put systems in place that you're going to streamline that operation. You're going to get the ability to get reconciliation to an almost automated process. Your reporting is going to get a lot cleaner, and all of a sudden your employees are going to get a little bit happier because they're not going to have to manage double entry of accounting or have to manage chasing this random payment that they can't figure out why it's in this system and it's not over here anymore. And, how do I manage this? So I think looking at it from that holistic lens of, okay, we have invested into a new ERP system, which, as everyone knows, if you're investing in an ERP system, that is a significant capital expense, like a ton of money. So looking at it that way of you're putting a lot of money into this for your organization. How do we create efficiencies around that with creating rails of automation to your banking, to your merchant processing, so that you're creating efficiency in your auxiliary products around it?
No, that makes sense. And Carly, I know this is near and dear to your heart. I'll just get you talking. I mean, you're gonna hit on virtual terminal tokenization, integrated reporting.
Fun stuff.
Go ahead. What are you seeing? What do you hear?
Let it rip.
Yeah, right. This is the part of the conversations with the clients too. Rob and Roberto just kind of look at me like, do your thing. So, no, this is definitely where I tend to nerd out a little bit, because payments can be messy. And depending upon the size of your business, the way that you're processing, you can kind of tackle it in a few different ways. But Rob, you're spot on. Integration's huge. ERP systems, we need to start having these conversations about payments sooner. From what I see in my seat, a lot of times I'm not brought in until a contract was already signed with an ERP and you're going through implementation. It's really hard to help with payment discussions when all the decisions have been made. It's such a large part and a huge impact to your business. My number one recommendation is just having those conversations a little sooner. So what I like to do personally is come in, to a, it could be a large client, it could be a small client, it does not matter. I like to come in and say, what does your payment ecosystem look like? Let me map that out. And I'm a visual learner, so I will literally map it out. I think you can attest to my notebook. It's full of diagrams. So I like to map out what their current environment looks like. A lot of times the individuals that I'm talking with sometimes don't even know that. So right away, we're delivering value and saying, here's a tool that you can use. Here's your payment ecosystem today. And then I work with, CFOs, the employees that are actually doing the processing, et cetera, within a business to say, what do you want this to look like? So not just coming and saying, hey, I can save you money and here's what we're going to do. More like, I want to learn about your business and I want to know what makes sense in terms of payment acceptance down the road. And let's get you to a spot where we are decreasing price and we are creating efficiencies and there are integrations and reconciliation is easier. But let's make it easier for your business. It's not a one size fits all. So we really customize our solutions to the client instead of having a solution and pushing it on them. And that's the philosophy that I like to live by.
Oh, that's great. And we talked about cost. We talked about working capital. We talked about reconciliation and how we can help from that perspective. We'll hit on a few things, but I do want to take a step back really quickly on cost, because there is a major component to cost that I think we didn't cover well enough, or maybe not fully deeply. Surcharging. When does that come up? I mean, I'm a business. I'm thinking, hey, listen, I'm getting charged for accepting credit card, 2.5%, 3.5%, whatever it might be. How do I take those costs and charge them back to my customer? Am I allowed to do it? When can I do it? How do I do it? Carly, what do you see?
That's a great question. Well, and it is something that comes up quite frequently. Surcharging is more complex than I think a lot of individuals think. So depending upon the state, depending upon what your business is, how you're processing, there are different rules and regulations surrounding it. So if you're a business and you're thinking about surcharging, it's not as easy as just adding a 3%, tag on an invoice. It is, you need to sit down with your processor. There's a form that needs to be sent to the card brands. There are certain rules in terms of signage and disclosing the information that are in place. So what I like to do is I like to understand, what is the reason the company wants to implement surcharging? And maybe is there a better route than your traditional surcharge? Maybe that's, a cash discount, or maybe that's really looking at all of your prices and increasing them by 2.5%. There are different strategic ways that we can go about making up some of those credit card processing costs without going straight to surcharge. However, I would say sometimes it does make sense just having a well-rounded conversation and figuring out if it fits your business or not. I think is a great starting point.
Yeah, no, those are great comments, and you have to be thoughtful when you do it. It can put you in a competitive disadvantage sometimes. You talked a little bit about registering with brands and Visa, MasterCard, those types of things as well. What are you seeing? We were talking a little bit earlier. You said every once in a while there can be secret shoppers that call around to see if you are doing any type of surcharging and seeing if you're not registered and how that can impact your business.
We're hearing a lot of that in our industry right now, that secret shoppers are going in to see if merchants are set up accurately. Are they following the rules that have been put into place? And when you expose yourself as a business owner to those types of risks, you're exposing yourself to fines, but even ultimately the potential to lose the ability to accept credit cards as a payment entirely. And that's really not a risk most business owners want to take. But there's such a lack of education out there around it. So often they see, well, so-and-so did it, and so I want to do it because I was charged it myself. If they're doing it, I can do it. That doesn't mean it's right. That Carly said, there's so many rules. It's different state to state. You just need to make sure you're having those conversations with your experts to say, am I compliant in the way that I'm doing this today, so that you're not facing those maybe unforeseen risks that are even out there.
No, that makes sense for sure. So great conversation thus far. Credit card. We talked about all the great stuff, but there's one word that comes up in every conversation I feel like I have with payments, whether it's merchant, ACH, check, wire, and that's fraud. So fraud, risk management. Now I'm introducing another payment type into my company. How do I protect myself against fraud? What tools do you offer? Myself as a treasury leader, as a controller, as a CFO, CEO, depending on who you are in the organization, what controls can I count on Johnson Financial Group and Deluxe to offer me that allow me to protect my company the way I always have? So maybe I'll start with you, Carly. What are your thoughts?
Again, this is something that needs to be tailored to the merchant's environment. I don't think there is necessarily a one size fits all, but I do believe if your processor is not talking to you about PCI compliance, they should be. Fraud is, as you said, Roberto, it's brought up constantly. It doesn't depend on the type. It's all over the place. And Deluxe, our preferred partner, has great tools in place, especially within their Deluxe payment platform that allows us to mitigate these. So, for example, I've seen instances where, a client has a website up and they accept payments on that website. And a fraudster comes in with a list of 2,500 card numbers that they got off the black market or wherever, and they're going to test them. They want to test to see if they're valid and they can go make a bigger purchase somewhere else. So they go on a open payment page of someone's website and they write code to test all 2,500 card types to see, okay, what goes through and what can we say, hey, this one's good, go buy the Mercedes or whatever they're trying to get. What a lot of people don't know is that costs the client money. So every time there is a ping, an authorization, that can be upwards of 5 cents, 10 cents sometimes. And you're talking something like 2,500 transaction. That's a large cost to the client that they have no benefit from. And that fraudster that was spinning that bot testing, they're gone. And so there's no recourse there. So putting tools in place like velocity limits, specific controls like adjusting transaction amounts and thresholds, that can really eliminate that type. And, I could talk for 25 minutes on this straight and just talk about all the different types of fraud and what different tools that we have in place to help mitigate that. But I am a firm believer on really fitting it to the client and not taking a solution and shoving it on them. We have so many fraud tools and risk management tools that what we like to do is sit down with the client again, talk about your full payment ecosystem, where you want to go, and then what makes the most sense. Cindy, I think you touched on a few things, and maybe you can do it again, just about, when businesses are going in and doing that self-management of like, okay, I'm going to restrict everything to one state, but then they decide to expand and go into, let's just say from Wisconsin to Illinois. They go in and they adjust that. So it's something that constantly needs to be managed. It's not just a set it and leave it. So
yeah, I agree. Fraud's always top of mind for every business owner. And you're here to mitigate the risk. You're never going to eliminate it because you want to transact, and unfortunately it's part of the risk of doing business. But proactive controls within virtual terminals are just expected nowadays. That is what is driving the industry, but it's not one and done. You don't just set it up and walk away and the fraud tools are in place for forever. As a business owner, you need to manage those with your environment. If you have peak seasons, you need to go in there, monitor what your settings are, and if it's impacting your workflow in the day, it's impacting sales, how quickly you can get anything out the door, it might be a season that you need to loosen those fraud parameters for a period of time. Or if they're not tight enough, you might need to tighten them up if you've had a loss because of a particular setting that wasn't turned on. So I really encourage business owners to look at those frequently and determine, okay, this is my appetite for risk for this season and this environment so that it doesn't impact how quickly we can get sales out the door, but it's a comfort level that, okay, for this season we're in. And again, it's seasonally based, so you have to keep visiting it very often.
No, that does make a lot of sense. And so it sounds a little bit like it's not an if from a fraud perspective, but more of a when. Rob, talk a little bit about why it's important to work with a strong partner like your bank for merchant processing, because, there's a lot of, I'm sure there's plenty of people on the call right now that receive a phone call on a regular basis or an email about a merchant services provider that can save them some money. So they're probably listening to us right now and they're like, yep, heard that before. But what does it mean when you work with your bank, when we're talking about a relationship and we're not solely focused on merchant services, but we're focused on making your business successful?
Yeah, I mean, we look at it from a broader view, right? I mean, we have conversations, as Carly mentioned before, of your whole payment ecosystem. So we talk about fraud from not only the merchant perspective, but also your bank accounts. How are we protecting the money that's leaving your actual true bank accounts as well? So the conversations that we're having with clients, CFOs, treasurers, around fraud is really just about peace of mind at the end of the day. Fraud controls is about preventing losses, but I think moreover, it's about knowing that they have the tools in place, whether that's on merchant services or on their bank accounts, to know that they can focus on their business and not have to worry about, what's happening behind the scenes, whether it's merchant processing or checks clearing or what's debiting their bank accounts. We can all say there's some costs involved with fraud protection tools, but when we talk with clients about that, the peace of mind and the risk mitigation that comes with that is well worth what the potential loss is and the peace of mind that you get with that.
Yeah.
So
appreciate that for sure. And I should have mentioned, if you have any questions, feel free to put them in the question box, and we'll do our best to get to them. Still have quite a bit to cover, but certainly put your questions in there. We'll get to them as soon as possible. So as we look ahead, the payment landscape just continues to shift and change. I'm old enough to remember the old knuckle busters, if anyone knows what that is, and maybe some people out there don't.
I just learned.
Then we fast forward, you're able to swipe your card, then you get the chip, and you get the chip and PIN. Now mobile wallets are all the rage, and so on and so forth. What are we doing? What's a roadmap look like for us, Carly, as it relates to Johnson Financial Group and payment processing?
Well, I think we've really positioned ourselves with a strong partner, and I think that's super important. With Deluxe, we get the latest technology. I would say they are leading the industry in that, and it's definitely cutting edge. So something that was already mentioned was tap to glass. I've seen that out there a little bit, but it's definitely cutting edge where you don't even need a device. You take your card and you are literally tapping it on a phone, and it's reading it right from that device. So I've seen that. A big thing virtually is the buy now, pay later. So with Deluxe, they have a partner that allows us to offer that essentially. So that is something that I've seen all over. And then P cards, purchasing cards, are also huge, the virtual cards. So more businesses want to pay with the one-time use too for fraud mitigation. So a new card number is generated each time, sometimes for a specific amount and to a specific person. So that card can only be used and is one-time use. There's some interesting interchange and data that needs to be passed through with those, and some nuances with purchasing cards in general that we can help set up and make sure that you're getting the best bang for your buck in terms of accepting those. But that is something that I continue to see over the years of different businesses migrating to wanting to pay larger invoices with card.
Yeah, no, definitely see that, certainly on the payable side. But I keep hearing something. It doesn't make it Deluxe. They're a check company. Right? What are we talking about? Merchant services. So feel free to visit deluxe.com. You'll learn a lot more about their payment processing. But Cindy, why don't you tell us a little bit about Deluxe and what you're doing?
Yeah, so Deluxe is, as everyone knows, they are known as the check company. So over 100-year-old company. And I think as we're talking about the evolution of payments, right? Everybody wants speed, they want integration, they want efficiencies. Deluxe is shifting with the market, and merchant services is a big part of our business. And we are becoming a data and technology company, and we have access, obviously, you said that earlier, to a lot of data. But I think we have a lot of strength because we have been in the industry working with financial institutions for over 100 years. We understand the importance of listening to our partners and what they need, what their customers need, and pivoting to that. And Deluxe has done a fantastic job. Carly mentioned DPP, our Deluxe payment platform, earlier. We've spent a lot of time and energy developing that, and all based off of feedback that we're getting from our customers so that we can be competitive. We can deliver the fastest payments and the fastest and best technology in the market, and and keep pivoting with that as that continues to change.
No.
Real quick, Cindy, I do want to add on to that. Interesting enough, Rob and I just had a conversation surrounding this, and I think it's so interesting to see the industry and the way that it's going and the technology and whatnot. And I don't know. I just think that it's so important to have a bank partner or a good partner that can help you with the technology, with the PCI compliance, the fraud, et cetera. Because for us, as a bank, merchant services isn't end all be all. My goal for our clients is to set them up with, and sales will hate to hear this, so I'm sorry, but it's
I've
really,
heard it before. You can say
I
it.
say it to almost all of our clients. I want to set our clients up to be positioned the best possible. And if that is not, again, I'm sorry, if that's not going with our preferred partner, that's okay. I still want to help. I want to make sure if you're a client of Johnson Financial Group, you have us as a resource. Let us just take a look at our payments. We understand that some ERPs, they have preferred partners. So there's no way we're going to get us in there. And that's okay. Let us at least take a look at statements, have another industry set of eyes on it. When you're successful as a business, we're successful as a business. And that's a huge difference between someone trying to sell you merchant services that is just a merchant services company.
And to that, you talked about early on when you start meeting with big customers that you have to map out this whole flow of payments. Don't feel like you're strong-armed into a solution. Add payments to the beginning of that conversation so that you do have a say in how you take payments and you do have a say in the cost of that. And you can look at it with a very educated set of eyes because you do have experts behind the scenes that are helping you make that decision, and you're not feeling forced into it because it's part of another system that you're wanting to use.
Yeah.
Well, and we have a peek behind the curtain. We
Right.
get to see all different avenues the business is already working.
Right.
So it's like, let's take that knowledge plus our payments knowledge and help you in any way that we can.
Yes.
Yeah. And even just we talked about competitively, and we talked about the cost and the working capital and all those different things. But what does it mean? I mean, I can speak for myself as a consumer, right? I might work with a particular service company, and there's a preferred method that I like to make payments, right? I don't like writing checks. I don't like providing cash. I like when I have the ability to pay online. How can you all help companies do that, Rob? What are you seeing? What's the future look like? What should Treasury leaders be thinking about?
I mean, client experience when we're talking to our customers is really important to have in their purview. Card payments, electronic methods of payment isn't going away. We're not going to be here 6 months, a year from now saying, well, cash, this is the only way we're doing it.
Bring back the penny.
Rest in peace, Penny, if you haven't heard. So I think at the end of the day, the focus is about balancing how your customers can pay you as easy as possible and as fast as possible, and changing the perception for your customer, for our clients of how they do that, and using that as a lever, right? Because that lever becomes really impactful, really powerful for them from a liquidity, working capital, and like I said, a client experience standpoint.
Yeah, no, that makes sense. And, in our space, again, we've been doing it such a long time. Oftentimes, consumer translates over to business eventually. And, how oftentimes have maybe you wanted to go somewhere and you ask your buddy, hey, they don't take card, they only take cash, and I can't go there. I stop at the ATM, pay the fees, so on and so forth. That can translate to a business perspective as well. I want to do business with you, but at the end of the day, I want to pay the way that I want to pay. So just consider that for sure. No, this is great. So I do want to thank, I know we're bumping up against the time a little bit here. Anything else from a roadmap perspective that we should be thinking about, or how else can we at least give our customers an idea of how Johnson Financial Group and Deluxe partner well together to provide some of the consultative and advisory services that they're looking for?
I would just say, I think you hit it right on the head when you said consulting. I think that's essentially what we're doing. We're not trying to sell a widget. We're not trying to sell, a solution necessarily. We want to consult and we want to help you so that you have more capital. That's good for us, right? again, I'll touch back. Merchant services company standalone, they really don't care about the capital, right? Mm-hmm. That's something that we do care about. I think in terms of innovation, picking a partner that can not only provide the service, but plus the technology is huge. And a lot of times you find the really large companies, large merchant services companies have the technology and it's fantastic, but they might lack on the service side, right? You don't get a dedicated account manager. You don't have someone you can pick up the phone and call. You're opening a ticket or you're chatting with an AI bot to find an answer. Which is great, by the way, in some cases, self-service. But, for something when it's payments and it's something important, that's frustrating and that's stressful. So really what Johnson Financial Group did in picking, and we went through an extensive RFP process to pick Deluxe. I mean, it was probably 14 pages at least of questions that had to be answered. And when picking a partner, I think it's very rare in the industry to find someone who can offer that technology but still provides that white glove service. That's what we get to from Deluxe, and in turn, that's what we pass on to our clients.
Yeah, you can't offer something you're not receiving yourself.
Right.
So cultures have to align, and I think that speaks to the over 100 years of experience in working with financial institutions. And something Rob touched on is being agile, like the ability to those are the most successful ones out there, the ones that are willing to listen. Even your commercial customers are willing to listen to the market and pivot with those changes. We're in such a fast changing market today. Unfortunately, you can't just pick something and say, we're going to stick with this and it's good from here to eternity. You might be reevaluating it in another 6 months. Is there another module, another piece that I need to add to that to help accommodate a new customer that's coming through, or you want to try to reach a new customer base?
Absolutely. The service, the forward-thinking data analytics to price it correctly, the advisory, the consulting side of it are all reasons why you should consider JFG and Deluxe as your merchant services provider. But at a very minimum, have a conversation. You talked about reviewing statements and having those conversations. I know specifically, I can't even understand my cable bill, let alone merchant services. If I had a cable, I did cut the cords. So if anyone wants that. But the reality is, work with your team. We have a dedicated team, either some of the individuals here on the panel or your local treasury management consultant. But I do want to thank you again, Carly, Rob, Cindy, for the discussion, and for all of you for joining us. The key takeaways for me are merchant services are no longer just about transactions. They are a lever for growth, efficiency, and security. If you'd like to continue your conversation, please reach out to your Johnson Financial Group representative or schedule time with your treasury management consultant. We appreciate everyone's time, the panelists, all you folks for joining us. We appreciate your time, and we look forward to hearing from you. Please think about how you can turn your payments into strategy. Have a great rest of your day, and thank you so much for joining.